great to have your company this Friday, the 11th of December. I'm Jessica Amir, market analyst with Bell Direct. Well, if you were looking for a big wake-up call that we're in a bull market and sentiment is charging ahead, this week your alarm clock would have probably been blaring in your ear. The market rose for 7 straight days coming into Thursday, popping to a 10-month high. All for good reason. The US and Canada became the second and third countries to approve the Pfizer BioNTech COVID vaccine for use, and the UK started vaccinating patients. In Australia, restrictions eased again in New South Wales and borders opened in WA. Consumer confidence rose to a 10-year high, business confidence jumping to its highest level since January 2018. And the iron ore price continued to dominate conversations. The steel ingredients price surged to a 7.5-year high, up 63% this year for iron ore. So broad market sentiment all in all is hot, but concerns in the background still linger that much of the world is still without a vaccine. As for standout stocks, Monday to Thursday share registry business Link Administration shares soared 12% to a year high on receiving an over $3 billion takeover offer for $5.65 a share, which Link said it undervalues the business. Now, in January, Link shares were $6.98. So you'd think a more attractive offer could be around the corner, particularly as 84% of Link's revenue is reoccurring. Helios shares another standout, up 10% to a 3-year high. The pathology business launched a share buyback program to return $200 million to investors after selling their medical centres for $483 million. HLS also plans to pay out 50 to 70% of their profits as dividends, and HLS was then upgraded as a buy by Goldman Sachs, Macquarie, Morgan Stanley and Credit Suisse, with targets ranging from $4 to $4.35. And Fortescue Metals shares another standout, up 9% to another new record high, $22.44, as it continues to benefit from Vale cutting iron ore production again. Meanwhile, it was reported that China imported 98 million tonnes of iron ore last month. That's up about 8% from a year ago. Now, the country imports 1.2 billion tonnes of ore per year, and demand is not likely to slow down for 15 years as China wants to, of course, double the size of their economy. Now, UBS expects FMG and BHP will continue to benefit from this and has buys on both iron ore majors, but expects the iron ore price to fall back mid next year as Brazilian supply is likely to start to recover. So keep that in mind. Moving to the 3 different themes to consider next week. Firstly, consider consumer confidence breached new highs in December. This is particularly important to note as stimulus is being tapered off and incomes are likely to have fallen in the fourth quarter. Morgan Stanley is forecasting that wages will continue to fall until mid next year, but expects consumer sentiment to remain high given the record low interest rates and that savings have built up to a record high over the past 6 months, and people are saving 20% of their income. So think about consumer spending stocks that we've been speaking about that will continue to benefit from the holiday season. The second theme to consider, domestic travel is up and running between most capital cities. International travel bans remain until March 2021 unless you've got a special permit or if you're a returning Aussie. So how has this increased air travel translated to bums on seats? Well, domestic seat capacity up 38% week on week at Sydney Airport and Auckland airports, and international seat capacity up 5%. So think about what this means for Sydney Airport and Auckland International Airport shares if momentum continues to build over the holiday season. So I'd be watching for the next catalyst. For Sydney Airport, November travel numbers are out on December 18. AIZ reports theirs on December 16. As for other travel stocks to watch, Bell Potter, Morgan Stanley and UBS backed Flight Centre Qantas is a buy for UBS, Macquarie and Bell Potter. And also check out Adacel Technologies, a little-known company that controls 21% of the world's airspace through their technology network. ADA is a Bell Potter buy with a $1.15 target. Now, this week it received a new order worth about $3 million to support an existing customer's simulation systems. Now, the third big takeaway is that Australia's central bank, the RBA, won't be proposing surcharge rules on buy now, pay later providers, and the RBA will reduce debit card fees. For buy now, pay later providers, this is quite positive, as companies like Afterpay should be able to continue to reduce their payment processing costs. Now, Morgan Stanley thinks Afterpay can cut costs over time and will still be able to make a 2% net profit per transaction. Plus, if the RBA lowers the 15-cent cap on debit transactions, then buy now, pay later providers' costs will further be reduced. What's incredible is that this week we saw Afterpay overtake Coles to become the 15th biggest company in Australia. And after the RBA update, Morgan Stanley increased APT's price target to $120. Bell Potter has a target of $140. What's really interesting is Klarna is dominating the buy now, pay later space in the US and picked up Macy's and Etsy as merchants. But in the September quarter, Sezzle saw the largest growth by adding 21,000 retailers. Morgans and Ordminet think Zip could be worth a look, as QuadPay, which is owned by Zip, saw things improve in October and November. So there's plenty to consider for next week. From all of us here at Bell Direct, have a happy and safe weekend. We'll see you next week for a look at where to invest in 2021.